This is what most people think. Okay, I want to make $1,000 a month in passive income from my dividends, which is like $12,000 a year. So if I want to make $12,000 a year and I can get a 3% dividend, that means I'm going to need $400,000 in my bank account to buy stocks so I can get my $1,000 passive income from dividends. I guess I'll pass. Here's the secret. If you really want to win in the passive income game, you have to understand that this passive income dividend game is secretly a compounding game. If you want to get to the $1,000 a month quicker, you need to do two things. One, you need to invest consistently into your dividend paying stocks. And second, you need to compound your dividends. I'll show you what I mean, and I'll stick with the McDonald's example to keep things simple. So 10 years ago, the McDonald's stock was trading for $65 a share, and they were paying a dividend of $2.20 a year, which is 55 cents a quarter. If you spent $1,000 in 2010 buying shares of McDonald's, you would have bought about 15 shares of the McDonald's stock because their price was only $65 a share. And in 2010, you would have only made like $30 over the year in dividends. Well, in 2020, those same 15 shares that you bought wouldn't have paid you $30, they would have paid you $75 in 2020 because their dividends went up. But now let me add in another variable to this. Let's say this time, you don't just buy $1,000 worth of the McDonald's stock, you buy 10 shares of McDonald's every single month. So in the beginning, that's about a $600 or $700 monthly investment. That means over the last decade, you would have bought 1,200 shares of McDonald's, and in 2020, each share of McDonald's is paying the shareholders $5 a share. That means in 2020, you would make $6,000 in passive income through dividends just for owning the McDonald's stock that you have picked up over the years. Now we're getting close to the $1,000 a month. But now let's do one more thing. Now, okay, you are buying 10 shares of McDonald's every single month, but every time you get a dividend check, let's assume that you don't go cash it out. Let's assume that every time you get this dividend check, you just take this dividend and you go out and you buy more shares of the McDonald's stock. Now, you're buying more shares of McDonald's every single month, but you're also putting more money back into McDonald's because every time McDonald's pays you, you just use that money to buy more shares. That means every single year, you're going to be buying more shares, which are going to be paying you more dividends, which you can use to ultimately buy more shares. Now, instead of owning 1,200 shares of the McDonald's stock, you are going to own 1,417 shares of the McDonald's stock, which means you're going to be making almost $7,100 a year in passive income. So even if you don't put in another dollar into the company, they're already paying you $7,100 a year. And if you're doing this dividend reinvestment, you are buying another $7,100 worth of McDonald's stock every year without putting another dollar into the company. So your wealth snowball is really rolling. But if you continue buying stocks like normal and you continue reinvesting your dividends like you've been doing, you will get to that $1,000 passive income mark in less than 5 years, and then you'll be able to double that very quickly. Oh, and I should also mention that if you do this and you own 1,400 shares of the McDonald's stock, you're also sitting on a nest egg worth almost $500,000 that you just happen to build up slowly as you're building your passive income. Now, your snowball is rolling by itself, and every time you add more money, you're just packing more snow onto your wealth snowball. That way it can roll bigger and faster and bigger and faster and make you wealth quicker. If you want to speed the process up, there's a couple things that you can do. You can invest more money, that way you're growing your money faster, or you can invest your money into a stock or ETF that's paying you higher dividends, because there are funds out there that pay 2 or 3 times what McDonald's is paying, but McDonald's is just an easy example because everybody knows what McDonald's is. But to get to that $1,000 a month, the regular passive income, you need 3 things. First, you need the right financial education, then you need the consistency, and then you need the compounding, because that's going to help you get there even faster. I know this can be overwhelming, but remember, investing is a marathon. It's not a sprint. It's a long-term game, and the people that understand it are the people that win over the long term. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.